You want to know why gold is screaming past $4,000 an ounce? This isn't the video where I tell you to buy gold. This is the video that explains the tectonic shift happening underneath your feet, using gold as the signal. Forget inflation, forget talking heads on the news. They are all asking the wrong questions. The financial system you grew up in is over, and the people in charge aren't buying gold because it's shiny. They're buying it because they're terrified. Most people get gold completely wrong. They think it's a simple hedge. Inflation goes up, gold goes up. Interest rates go up, gold goes down. That was the old map, and using an old map in a new world is how you get lost. The model broke. It shattered in 2022, and almost nobody noticed. While you were watching stocks, governments were quietly preparing for a world where money is a weapon. The game changed from a financial one to a geopolitical one. This isn't about economics anymore. It's about survival. First, you need to understand the breakup. For decades, the US dollar was tied to gold, $35 an ounce. That was the rule. It anchored the entire global system. Then, on August 15, 1971, President Nixon cut the cord. He severed the link. The dollar was on its own. In that moment, gold's job description changed forever. It went from being the system to being the ultimate insurance policy against the system. It became the panic button for a world built on currency printed out of thin air. That one decision set the stage for everything we are seeing today. Now let's look at the last 10 years. This is where the story gets interesting. From 2015 to 2018, the old rules worked perfectly. The US Federal Reserve raised interest rates. The dollar got stronger. Gold went nowhere. Why would you hold a rock that pays you nothing when you can get paid by holding bonds? Makes sense. This is what the textbooks teach you. Then came the pandemic in 2020. Global panic. Governments hit the money printer harder than ever before. And gold did exactly what it's supposed to do in a crisis. It soared past $2,000 for the first time. It was a classic fear trade. Predictable, easy to understand. But then came the real shift, the great decoupling. In 2022, Russia invaded Ukraine. The West's response wasn't just military aid. It was financial warfare. They froze Russia's foreign currency reserves. Hundreds of billions of dollars. Gone. Instantly. That single act sent a shockwave through every central bank on the planet. The memo wasn't written in ink. It was written in blood. The message was brutally clear. If you hold your nation's wealth in another country's currency, you don't actually control it. Your assets are just a liability someone else can turn off. The US dollar, the world's reserve currency, was just weaponized. And in that moment, countries from China to Poland to India all had the same thought. We need an asset that nobody can print and nobody can freeze. An asset that sits in our own vaults. We need gold. This wasn't a polite discussion in a boardroom. This was a synchronized, global reaction. It shifted gold from an economic asset to a national security imperative. This is the key. While the Fed was jacking up interest rates, which should have crushed gold, the price held strong. It even started to climb. Why? Because for the first time, massive, non-price-sensitive buyers entered the market. Central banks weren't buying gold for a return. They were buying it for protection, for sovereignty. This created a permanent new floor under the price. The old rules were dead. That brings us to the 2025 surge. It's not one thing. It's a perfect storm of four powerful forces hitting all at once. First, the monetary pivot. The market knows the Fed is about to cut interest rates. They have to. They printed their way into this problem, and they'll try to cut their way out. This is a direct attack on the dollar. Lower rates reduce the yield on bonds, making a non-yielding asset like gold look far more attractive. It punishes savers and pushes capital to find safety. This is the fuel for the fire. Second, the great diversification. The central bank buying spree that started in 2022 has gone into overdrive. This isn't a trend. It's a structural stampede away from the dollar. China, Poland, Turkey, India, they're leading a multi-year campaign to de-dollarize their reserves. The World Gold Council's own data shows 81% of central bankers expect global gold reserves to increase. They're telling you the plan. This isn't a trade. It's an exodus. Third, the geopolitical risk premium. War in Ukraine. Persistent instability in the Middle East. Renewed trade friction and tariff threats between the US and China. Domestic political uncertainty and government shutdowns. The world is unstable. Every headline is another reason to own an asset with no counterparty risk. This is the constant, simmering fear that keeps a bid under gold. Fourth, the flood of capital. Everyone else is waking up to this. Investment funds are seeing record inflows. Retail investors are piling in. There's a frenzy. In India, a massive retail market, inflows into gold ETFs surged by 578% year-on-year. Government gold bonds are trading at a 32% premium. That's not investing. It's a desperate grab for a safe haven. The craziest part? People are buying both AI stocks and gold at the same time. Think about that. They are simultaneously betting on a technological utopia and a complete systemic collapse. That's not investing. That's raw systemic anxiety. They are hedging against the very bubble they're participating in. It's the ultimate what if I'm wrong trade. This is the FOMO, the panic buying that's lighting the fuse. So here's the only framework you need to understand what happens next. Think of it in 3 layers. This is your operating system for seeing the truth. The floor. This is the structural demand from central banks. It's the new foundation. It is not price sensitive and it is not going away. This provides a strong, permanent base for the price, insulating it from the old rules. The accelerator. This is macroeconomic policy. The Fed cutting rates. A weakening dollar. This is the gas pedal that drives cyclical bull markets. It's the reason we move from stable to surging. The turbo. This is geopolitical crisis. A new conflict. A major political shock. This is the nitrous boost that causes parabolic spikes like the one we're seeing now. And there's one more piece to this puzzle. Supply. While demand is exploding, the supply of gold is incredibly rigid. Mine production has been almost completely flat for years. You can't just flip a switch and make more gold. And the people who already own it, they're not selling. Even at record prices, recycling rates are low. That tells you everything. The owners believe we are still in the early innings. This inelastic supply acts as a massive amplifier. Every new wave of demand has an outsized impact on the price. Stop looking at the price. Look at the layers. When you see the news, don't ask, what did gold do today? Ask, which layer just got stronger? The answers to those questions will tell you where gold is going far more accurately than any chart. Gold's rise to $4,000 isn't a story about a metal. It's a story about a loss of faith. A loss of faith in governments, in currencies, and in the stability of the system that has governed the world for the last 50 years. The party is ending, and the search for a safe ride home has begun. The price of gold isn't going up. The value of everything else, measured against it, is going down. The financial system is a ruler, and the inches are getting shorter. This is a signal, a fire alarm in the global financial architecture. In an age of uncertainty, complexity, and digital promises, the world is instinctively reaching for the only asset that has meant trust for 5,000 years. It's not a relic, it's a reawakening. The question isn't whether you should buy gold. The question is, are you prepared for the world that is causing everyone else to?